For more on the economy and new investing opportunities, let's bring in Chris Varvares. He is Vice President and co-head of U.S. Economics at IHS Markit, where they can't spell for a damn, but they're really good at economics, M-A-R-K-I-T. And Tim Lesko, partner at Granite Investment Advisors. I want to start with you, Chris, just with that same point. If you base everything on that ADP report, would you change some of your projections or have you changed at IHS? Because you're not that bullish. You're still kind of worried about things economically, are you not?
Oh, absolutely. So, yeah, we're looking for a deep hole in the second quarter, 43% decline in GDP at an annualized rate. Even though we have green shoots in personal consumption expenditures, as some of the things that Steve was highlighting, we're looking at something like a 50% annualized decline in consumer spending in the second quarter. So it's a deep hole. With respect to the ADP number, I would just take that with a very large grain of salt, because how do they handle non-respondents, businesses that aren't processing payrolls because they're closed down? It's quite possible that they're counting them as having this no job losses. And we know that the BLS had to deal with this issue when they processed payrolls for April. So.
You did raise your third quarter estimate, though, for growth. You went up 50%. When did you do that?
Well, don't use growth rates on growth rates. We went from a small negative number a couple of months ago to about a 10% increase in the third quarter. But that was at the same time that other data was indicating that the hole was going to be deeper in the second quarter. And net, we revised down the growth rate for 2020 as a year.
Well, none of that's very positive. Tim, since I don't have that much time, I want to get to, you're still buying stocks, and that's why you're here to tell us what would you add to your portfolio now that you think you're looking at value and potential for reopening, good prices and good prospects?
Well, I think, as you know, not to put a pall on economists, but most of that data is in the rear view, right? We're talking about what's going to come of the second quarter numbers, where stock prices are looking at what's going to come of the third quarter, the fourth quarter, and next year. And so certainly fewer people are flying, fewer people are staying in hotels. Kind of excited to hear what Arne Sorensen has to say. But as the economy opens, stock prices are starting to reflect what we're going to see a year from now, not what we saw during the depths of this in April and May.
So what you give me your stocks? You added some to the list, right?
Right. So we added Disney as what we would consider finding a great company at a pretty darn good price. When they closed the parks, investors were running for the hills, and we were investing in it. And I'd say the same with Southwest Airlines.
Certainly. Oh, okay.
Right. Yeah. Which most, we got a fair amount of feedback that people thought we were maybe off our rocker a little bit buying an airline when the thought was no one was ever going to fly again. But people are flying again. Airlines are adding flights to their schedules, and at some point, planes are going to be full again.
Yeah, you added Dover. Anybody ever going to ride an elevator again? Dover, W.W. Granger.
Right.
That should be a country singer.
You think about it.
And Lowe's, and Lowe's too, huh?
Well, Lowe's was fortunate. Lowe's as a value stock was a turnaround play as it was, and certainly benefited from a tailwind of what we're calling nesting, where people were beginning to spend money on their homes because they really had nothing else to spend money on. And the consumer's balance sheet, although unemployment is really troubling, the consumer balance sheet has been pretty strong because we've been paying a lot for unemployment insurance, and people have not been spending on restaurants and travel. So people have been saving money and now spending it on their homes.